Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Nasdaq hits fresh record high. Our portfolio. Gold surges. Tip of the week. Micro-DAX futures. And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Not exactly brilliant week on the markets. More or less all financial sectors show negative or at least quite disappointing returns, with the only exception of the Nasdaq, which managed to overcome the all-time highs, but which, as you can see, is currently only slightly positive. Negative instead the mini S&P, which, after breaking the all-time highs, also dropped. Bonds are also slightly positive. In this chart we see the T-bond future, which is trying to rebound from the lows touched a few months ago. We can say that the energy sector is holding. It shows slightly negative returns, with the only exception of crude oil future, which is still close to the all-time highs. The metal sector shows very negative performances, minus 8% even for copper future. Mixed returns instead for the meat sector, with a minus 6% for the Linox future, that was previously in strong uptrend, and a plus 3% for the feeder cattle. Let's go to the really negative financial sectors, which are the soft commodities. You can see negative returns everywhere, and the cereals with a minus 14% for the bean oil, which was in strong uptrend, but which returned a good part of this rise in the last week. Negative returns also for currencies. As for Bitcoin, we find it at the same levels as last week. It has tried to exit the trading range, but without success. Finally, as regards volatility, we see very low percentile values both in the short and long term, and for both American and European indices. Switching instead to implied volatility, with today's decline we notice a slight increase in volatility. The term structure seems to be almost in a complete contango, but the 9-day volatility has exceeded 1 month volatility. Anyway, you can see that the VIX values are still very low. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to show you two strategies on the gold market, because this week this market has increased volatility, we can say, also on the other metals market, like the silver and the copper, for example, and the platinum and so on. And I want to show you two strategies that are trend following in different ways, we can say, because the first one, which is an intraday strategy, enters on the highs and lows of the day before, both for long and short, while the second one will enter after a cross of moving averages. The first one is an intraday strategy, and the second one will be a multi-day strategy. And so the time horizon change, but the results, and we will see them, are pretty good and fine. The first strategy enters with stop orders, and so, for example, in some cases you may face on some big spikes of the market we may face a big slippage. Of course, this is not happening every day, fortunately, but just be aware of the fact that entering with stop orders, slippage may be also big in some circumstances. Of course, this market, and we can see it, is very liquid, and also now at this moment has already traded over 60,000 contracts, and so we can be quite safe in trading this market. This strategy is from 2016, so was developed 5 years ago, and it is continuing to behave nicely. Is part of the strategy that we provide to our students, and we can see that 2 days ago made a beautiful short trade for 3,500, and we can see that the strategy entered here near the low of the day before and then closed the position at the end of the day. Thanks to this trade, the strategy is trying to recover from a drawdown that lasts from some months, and in particular going to see the equity curve of the strategy. We can see this drawdown that here lasted some months, as said, and now after this trade is trying to recover. Of course, we can see that over the last year, 300 days, so we can say the last year, the strategy has performed really well, and with this last trade is trying to recover and make us happy, we can say. Now let's move to the next strategy, that is again a trend following one. We know that this type of strategy is the most performing, was the most performing over the last years on the gold futures, and was developed in 2017, so over 4 years ago. This kind of strategy, as said, is a trend following one, but it doesn't enter with stop orders on highs and lows of the day before or some other trigger point, trigger level, but instead it uses two moving averages, one fast and one slow, in particular the 25 and the 85, and it will wait for a crossover and a cross under the slow moving averages to enter long or short. We can see that the strategy made many trades, and so we can consider this strategy heavy. But looking at the equity curve, we can see that the strategy with this last trade of $5,000 managed to recover this last drawdown, and also over the last year the strategy has performed really well, demonstrating that it can identify for the better gold futures trends.
Hi everyone, and welcome from Andrea Unger. Today we will have a look again to the DAX future, but in particular today we will talk about the Micro-DAX future. In fact, in the middle of April 2021 has been released the third future on the DAX, and in particular it's the Micro-DAX future. So as you may know, there are two different DAX contracts. The first one is the whole contracts on the DAX, which has a point value equal to 25 euros. Then in 2015 had been introduced the mini DAX future, which has a point value, so a multiplier equal to 5 euros per point. And finally, this year, in the mid of April, has been released the Micro-DAX, which has a point value of 1 euro per point. This product may be extremely useful for low capitalized traders, so traders with a very low amount of capital available for trading purposes. So it may be extremely interesting from this point of view. And here, just to summarize everything, you can see that all the three futures has the same minimum price change, so the tick size. In fact, on all the futures, the tick size is equal to 1 point. I remember you guys that on the main contract of the DAX, it had been changed in December 2020. And prior to December 2020, the point value, so the tick size on the DAX was the half point, so 0.5 points. But now they have all the same minimum price change, and the changing between the three contracts is only what regards the contract value, so the multiplier. That on the DAX future is 25 euros, on the mini DAX is 5 euros, and on the micro DAX is 1 euros. For what regards the session times, it's the same. So there is a continuous negotiation between between 10 past 2 a.m. up to 10 p.m. But let's have a look to the volumes of this contract. As you can see here, the number of contracts in the most recent bars as today, so as June 21st, 2021, goes from approximately 500 contracts to a maximum of 6,000 contracts. So at the moment, the number of traded contracts, in my opinion, is quite low. But if you go back, for example, into the mini DAX history, at the very beginning of its listing in October 2015, also here the number of contracts was extremely low. And this is pretty normal because all the main operators used to still operate on the main contract, and only gradually they switched their operativity in partially on the micro contract, on the mini contract too. And as you can see here, after a bit of time, the number of traded contract on the mini DAX started raising, but they were in any way extremely low if compared to the whole contract. So what I think that the number of traded contracts, so the volumes on the micro futures, is actually extremely low, and I would wait until the average volumes per day will arrive at least at up to 20,000 contracts per day to trade safely also this kind of product, avoiding extremely high slippage and commission, because it's possible that there are very few counterparts on the negotiation, on the book, on the order book, when you try to trade some contracts.
Many rollovers for the next week. We start from the energy sector because the next week there will be the settlement date for crude oil, heating oil, gasoline and natural gas. Personally, I rolled a crude oil future just today. As regards grain, we are approaching the first notice day for all the futures, so we have to roll also the future of the grain sector. But be careful to choose the correct future, which is the one with the highest volumes and not just the following one. And exactly the same goes for livestock and soft commodities futures. I hope you enjoyed this video. And if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the four-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.